I think there are lots of different ways that you can look at affordability, and the way that Ed's worked out those numbers are quite legitimate. But we also need to look at why things have been so affordable. It's because of interest rates. Now, interest rates are still very low, and mortgage rates, in fact, are lower than they were this time last year. So in terms of the debt burden, then things are quite affordable for people who are in there, which is why we haven't had the arrears and possessions crisis that we've had in this cycle. But it's clear prices are rising, and that makes it less affordable for people to get into the market, particularly as you're now seeing the MMR regulations coming in, where people have to prove their income and prove that they'll have enough cushion left at the end of the month when all their essential outgoings have gone.
Yeah, these MMR regulations, the Mortgage Market Review, and of course the tightening up on mortgage criteria that's gone with it. I mean, if you look at some of the data that's come out already, you can see that mortgage approvals have been falling back. Signs perhaps that this is having an effect?
It may be the case. It's a little bit early to say that that's definitely the case, but it could well be the case, even just because affordability has been worsening anyway. So even though prices have been increasing for some time, it might be now that you'll be seeing those affordability measures actually biting, even before the MMR criteria actually came in.
It's interesting though, isn't it? Because you've now got the MMR, as you say, on top of the bite that was already happening. But the MMR rules don't touch the wealthiest, the cash buyers, the foreign investors, the kind of people perhaps who are driving up the frothiest bits of the market in central London. So in some ways, surely struggling home buyers are paying the price.
Well, actually, we're now seeing that the prime central London markets, actually price growth is really coming down. So there is some softening there, and that's what you'd expect in a global economy where other asset prices are perhaps increasing, where we've already seen a big increase in house prices in London, perhaps looking for somewhere else where they're going to get better yield and better capital gain. Now, inevitably, that has helped to bring things up in London in general, but that's not necessarily going to be the case to carry on. And in fact, we have seen actually prices in month on month in the southeast, for example, and for England and Wales as a whole, actually fell back last month. So that may be a signal that there is now resistance. And in fact, we are seeing in our own data that the average price of properties that we're selling has been dropping back a bit, which reflects that there's more going on in the lower price bands rather than just the very high price bands.
So when you talk there about yields and capital gains, we're talking about professional investors. So you're suggesting that perhaps they're starting to draw back when it comes to snapping up properties in London? Well,
there may be some of that going on, but that's what you would expect here for investors to be doing. But that's really not what's happening in the mainstream market that affects people like you and I who are buying a property to live in and to live in for a long time. Now, prices have been increasing, but I think, as I say, I think we are beginning to see some resistance to that now. And in fact, that might be a good thing, because we talk always about house prices, but they're not a good indicator of the health of a market at all. What we really should be concentrating on is transactions. And ironically, now that we're seeing a little bit of resistance, we may now begin to see sellers putting their properties on the market as their equity has been restored and as they think we've reached a peak again now, we've reached, things aren't going to increase much more, now's the time for me to move. And that's been a problem. We haven't had enough stock on the market, particularly in London, and that's helped to drive up prices as well.
The irony, of course, is that this could happen at a time when those mortgage restrictions are starting to bite, and actually, those buyers who are thinking, actually, yeah, there is more property, I want to go and buy it, then find it hard to get a mortgage.
Well, that will depend on where they are and the price at the property that they're trying to look at. If you've got more stock on the market, as more people come to market to sell, then you've got more choice anyway, so you might expect a softening in the rate of growth of house prices. But it is important that people buy a property that they can afford to do that over the long term. As Mark Carney said today, it's for life, not just for Christmas. Hopefully not for life, because you want to pay off your loan at some point, but it's for a long term.